Happy Monday once again, everyone. Bryan Devore, Devore Realty Group, Berkshire Hathaway Home Services, California Properties. Another Monday market moment. Today, we're going to attempt to answer the question, will history repeat itself this holiday season? What are we talking about? Well, we'll find out shortly. Let's first take a look at the most recent stats we have on the market. Right now, we have 5,577 homes for sale throughout the county. It's a big drop of 87 versus last week, with no change in the median list price of $899.9. Average days on market, 61. Pending sales, 2172. That's a drop of 12. So inventory is dropping faster than demand. Median list price, 878. And the average days on market, 41. Months of inventory up slightly to 2.96. It was 2.87 last week. So still considered a seller's market under 3 months. Here is the chart showing total actives, total pendings. Total actives continuing to go down. Total pendings also continuing to go down. What happened last week? Last week, we saw 567 homes come on the market, a big drop of 161 versus the week prior. Median list price, $899. New pendings, $298. Also a sizable drop of 68, but not nearly as big of a drop as number of new listings. Median list price, $899. Average days on market, 36. New pendings listed within the last week, 11. Within the last 2 weeks, 88. So 4% of homes are selling in a week or less. 29% in 2 weeks or less. It was 26%. So a little bit of an increase there. Some homes selling faster. How many homes closed escrow last week? 297, kind of a sizable drop of 78 versus the week prior. Median list price, $899, lower than the week before. Median sales price, though, was up to $900,000, so a little bit higher median sales price versus median list price. Average days on market, 39. Big jump of 6 versus last week. Encinitas had the least expensive sale, a manufactured home for $125,000. Coronado had the most expensive sale for $9 million. Here's a chart showing new actives, new pendings, and new closed sales. And as we saw a few weeks ago, we started seeing sort of an upward trend of the number of homes coming on the market and then a huge drop. You can see the biggest drop or the least number of new listings in a couple months. And as we get towards the holidays, also the huge drop in the number of pending sales, which is going to translate into fewer closed sales down the line. And the closed sales, you can see the lowest they've been in a while. Here's a chart showing median list price, median sales price holding steady. Stephen Thomas did come out with his reports on housing, active listing inventory continuing to drop, still well below where we were before COVID, but the highest it's been in the last few years. And we are right about where we were in around April time or so. And it's been steadily coming down, following the normal trend line of this time of year. And then demand, the number of homes that go pending in a 30-day period of time, very flat line. So not the steep drop as you're seeing in inventory. Still a drop, but a much flatter line. We actually have more demand now than we've had in the last few years. So even though rates are higher than they were, 3 years ago, they're lower than they were a year ago or even 2 years ago. And so it's good to see that demand is higher, still well below where we were before COVID this time of year, because, homes are really expensive right now. Affordability is tough. Here is the expected market time. You can see it was coming down, which is a good sign. It's flattening out. So the number of days it's expected to take to sell is flattening out, still above where it has been over the last several years. Here is the balance of what's selling versus what people want. Right now, 36% of the current inventory is under $750,000. Current demand, 33%. So more supply than demand in that category. But then you go to 750 to a million, way more demand than supply, 29 versus 21%. Hence the lowest days on market, 67, or expected days on market, 67 days. 70 days. Last year was 67. So not much more, only a few days expected more for that price category. Also about the same for the million to 1.25 million. It's expected to take about the same number of days. So interesting breakdown of the different price categories and demand versus supply. All right. Do we expect to see a repeat of history as far as the holiday season is concerned? We are now into that holiday season. You can see the last few years, inventory dropped from mid-November to the new year. And you can see last year we had a 28% drop. The year before, 22%. The year before, 32%. Partially that year rates really went up a lot that year. Demand drop from mid-November to New Year, 31%, is what happened last year, which was a lot larger drop than it was the year prior, and the year before that. Expected market time change from mid-November to New Year, plus 3 days. Last year there was no change, but plus 3 days last year. Homes pulled off the market in November and December. Those are failed listings, homes that just don't sell for whatever reason. Last year was huge, 2257. We're seeing a lot of failed listings selling as well this year. So will history repeat itself? What's the expectation? Inventory and demand will continue to drop as they normally do. But I don't think we'll see as big of a drop in activity as we did last year, or the year before that, because we're seeing sort of that flattening of the drop in demand versus the steeper drop in supply. So we'll have to wait and see. We'll look over the next few weeks and find out what the truth is. That's it for this week's Monday Market Moment. Hope you have a great day, great week. I look forward to seeing you next Monday.